General Motors, one of the legacy companies of the United States and the creators of the automotive industry. General Motors is a legacy company that for many years has improved and developed its organization and faced numerous challenges. However, General Motors is currently facing challenges that will be hard to overcome based on simply its operating model. And I'm going to dive into that today in Strategy Simplified. Our focus today is on understanding the recent performance of General Motors. And so I'm working off of their 10K that was reported with complete reportings from 2019, the year ending December 31st, 2019, in fact. And so I think unequivocally, we can say that 2019 was one of the biggest boom years in American history, certainly, and even in global economic history. Lots of major growth opportunities and people at the top of their game. So what we should see for a successful automotive manufacturer is increased performance in terms of its ability to source, increased pricing, and the ability to drive price up and revenue up. And in fact, we should see an improved bottom line as well. Unfortunately, we see none of those for General Motors. And so I'm going to walk through why that might be, what their cost structure looks like, and what's happening. You can access this 10K in your show notes if you want to follow along. So where I'm going to refer to for this particular insight here is talking through the total net sales and revenue and the automotive and other cost of sales. I'm on page 26 of their 10K. And here, what I can look at really quickly are the couple different lines of business. We've got GM&A, GMI. So GM North America is one and very large piece of the business, and then GM International. And then we have a corporate portion of the business, which is really fractionally important, very tiny. That's all the automotive business. We also have two other pieces of the business, the cruise business and the financial business. And financing for GM has largely been a major operation in terms of the financing opportunities, and it's been a big profit driver for the organization. And we don't see really anything different here. Essentially, GM makes a near loss on their cars, a very, very small profit, and they make almost all of their money on the financing of those cars. But what you can see that is perhaps even more worrying are a couple of trends. So the revenue went in GM North America down by 6.5% from 2018 to 2019. When people should have been replacing cars and buying them even more favorably, we saw a slowdown for GM. That's a problem. My guess is that that's not just a market-based loss, but that's probably market share loss as well. So about 6.5% down. In addition, when we look at it, we can see that international saw even a bigger hit, 15.9% down in sales. So we're seeing a decrease from year over year in sales. That's not good. We also see that we are growing in financing. That's good. But cruises are really basically just went from 0 in 2018 to a little bit in 2019, not a major difference. So ultimately, what we can focus on are the changes in the automotive sector, which were down, weighted 7.8%, and the increase in the financial sector. So not outweighing the changes in the automotive sector by either percentage or by volume. But what we see that's really enlightening here is whether this is a fixed cost or a variable cost business. And when we understand what kind of business it is, what the cost drivers are of the business, then we can understand how GM needs to or should be operating inside the business. And what do we see? Well, we see that on revenue of $106 billion in 2019, GM spent $95 billion on the cost of sales, which includes material cost at about 2/3 of the total amount. The rest is labor cost, depreciation, engineering, product warranty, and recall campaigns. Okay, so 2/3 of that $95 billion is materials cost. That's a massive amount spent on materials. But the other thing that we see is that on revenue of only $106 billion, we only have let's see here, out of $95 billion, we only have $11 billion that is actually attributable to not just net profit, but gross profit. So to cover all of the general and administrative expenses of the organization, we only have $11 billion, under 10% of the total revenues. That is a massive allocation toward cost of revenue, or toward a variable cost side of the business. So what kind of business is this? This is a variable cost business. This is a business that is variable cost, and it's declining in terms of the volume that they're selling. We don't know if the volumes and prices are going down, if it's predominantly prices or predominantly volumes, but we can definitely see that negative revenue change across the board. So when we look at everything all together, we can see that this is a company that is looking at another pending crisis, right? Negative sales trends. The decrease in performance for their cost was not commensurate with the decrease in their revenues. So they are not driving down the same amount of costs. In fact, their cost of sales should be a smaller percentage, and they're actually a larger percentage of revenues, which is the exact opposite of what we want to see. And they have very little coverage for their fixed general and administrative costs. So across the board, this business, as a variable cost business, has unfortunately very slim margins as well. So now if we go down to their profit and loss statement. Great. So now we're down on page 47. And what we can see here is that, again, the total automotive business, which is North America, corporate, and the international business, was $123 billion in revenue. GM Financial was $14.5 billion in revenue. So their total net sales and revenue were that number. And then the $111 billion, if we round up to automotive and other costs of sales, and then that total amount is the automotive and other costs of sales, which is both North America and the international business. Their financial interests, operating and other expenses, are $12.6 billion. So even though GM Financial didn't account for cost of sales, they do have cost of sales in GM Financial as well. And then automotive and other selling general administrative expenses, we end up with $132 billion. So super slim margins in the first place. Basically, like what we can see after that is that the automotive interest expense is really limited, that we have, interest before income taxes and very small income taxes. So interestingly, the business is making a profit. But like I mentioned, one of the biggest concerns here is that they're making a profit, however, just on a very small amount of revenue and a decreasing amount of revenue. So as we see that, the earnings per share have fallen in the business, and the business is perilously close to not making a profit. With the shocks to the industry in 2019, including both limited car production and limited car sales, people that are less interested in buying a new car, just happy to stick with what they've got and unconcerned about making the trade-in unless it's absolutely necessary. We're probably going to see an even bigger shock to the business. And a bigger concern is going to be, were they able to manage their sourcing and manage their costs down for the business? So what should GM do in the future, and will they be successful? I'm concerned. I'm concerned about the loss in revenue. That represents a decrease in either demand, which focuses on a decrease in pricing and volume, or just a decrease in volume, maybe a shift away in terms of market share. So I'm concerned about the revenue loss. I'm concerned about the fact that the cost percentage for the cost of revenues did not go down at the same rate that the revenues did, that they didn't plan for and accommodate for that and didn't manage costs down. I'm concerned about the fact that the business seems to have this aura of systemic decline around it. And so I would like to see a growth driver inside the business that I just can't see. GM is a company that certainly has runway. It is making a profit. With a profit, you can sustain indefinitely. But I'm concerned that in a year like 2020, that profit could be wiped out. Let's do one final check and just see how long could they sustain a loss in profit? What's the business holding in terms of cash and cash equivalents? Honestly, they're in a fairly decent shape. So cash and cash equivalents at the end of 2019 were about $19 billion. So even with a loss that they sustained, if we look back to 2017, they sustained a loss. It was only $3 billion. So it's unlikely that the business is going to go out of business in the time being. But there are a significant number of debts that could be coming due in the business. And so this could be an organization that maybe not in the immediate term, but in the very near term could find itself in crisis. If you're interested in understanding how to think about businesses like GM, think about cost drivers and revenue drivers of the business, and think about how to make changes with them, use the Strategy Simplified framework. It's pretty simple and basic. We first focus on cost drivers, then we focus on revenue drivers, and then we think about how to make the business successful if it's not today. GM is a tough one, but there is some upside and some growth opportunities in both the international and the North American segment, but fixing North America and fixing the cost there is going to be really critical for this business. We're looking forward to walking through future episodes of Strategy Simplified with you. Thanks for joining today. Thanks for joining this episode of Strategy Simplified. We hope you've really enjoyed it. General Motors is an amazing company, but it's complex underneath the hood. And if you want more tools for how to think about businesses like this, whether you're preparing for a case interview or thinking about going beyond that, we have plenty of them at managementconsulted.com. In addition, if you liked this episode, please subscribe to the channel and leave us a review. Thanks for joining us today, and we look forward to having you with us on a future episode of Strategy Simplified.